Easy predictions and welcome everybody.
All right. Yeah, sounds good. So, all right, you can go ahead and start it.
All right. Hey everybody, welcome to the show. If you don't know who I am Jeffry Turnmire. I run JeffryTrader.com and I began playing the stock market game. Maybe you're familiar, maybe you're not. It's a program that they allow grade school age kids starting young. I think I started around the third grade. I think now you have to be in the fourth grade to start. And we filled out Scantrons and stuff back then. And that was quite a few years ago, back in the 80s. Now, some of you I know have probably been trading professionally since way before then. That's okay. I began professionally trading about 28 years ago now in the late 90s. I'm an expert technical trader, option chain analyst, known for accurately predicting market tops, bottoms, changes, and trends along the way. In 2020, I turned $250,000 of my family's hard-earned retirement account money into over 1.4 million in under a month, in the month that we know as the COVID flash crash. And most recently, I've been programming bots that automatically pick trades and send them out to traders like you. Now, I know that's great and all, but I'm not here to waste your time today, so let's get down to it. I have a few bold predictions to make across S&P 500, gold, Bitcoin, Doge, and it's not the crypto Doge, that's the Department of Government Efficiency, interest rates, and as part of interest rates, we'll talk about inflation too. So without further ado, let's just jump into some charts, shall we? And let's see if we can connect this session up, and let's flip over to my morning monster list here. Let's just talk about the S&P real quick. And I'll probably have alerts and all sorts of things pop up along the way. It's kind of an active trading day if you haven't noticed. So let's just kind of high time frame, zoom out and look at the S&P. Let's go even higher here. As I said, I didn't really have major things predicted here, but this is, setup. I have major things predicted, but not really setup. So we have this event back here. Anybody remember this? Probably not. But you might know what this was right there. Right there. On this time frame, that doesn't look like a whole lot. Not really. But if we make a few adjustments to the chart, maybe like this, possibly go back down to a daily time frame here, and make sure we have a log scale set. Let's pan back to a land far, far away, long, long time ago. Keep going, keep going, keep going. Back in the 1929 area right here. Now, what does this have to do, Hill of Beans, to do with right now? This was basically 100 years ago, right there. We kind of chopped and we went into this epic run higher right here. Now, prices notwithstanding, but shortly after that, we did a big correction. That big correction came all the way back down here. This was a pretty epic 84% correction in the S&P 500. A lot of people say it can never happen again. That's okay. But what I want you to kind of look at right here, look at starting at the turn of the century, right in here, 1901. Look how this kind of chopped right there, and then we exploded higher, which resulted in a big down like this, right? Everybody kind of got that concept? Well, check this out. What we have when we bring this back to current times. Rolling forward, 100 years later. Dun, 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 dun. Start zooming this out just a little bit. And it's a long time, right? Look, here's turn of the century right there. We start getting this chop. Chop it along, chop it along. Starting to see some similarity. Chop it along, chop it along. Zoom her out just a little bit. Back up, well, 3-day was what I meant to click on, not 3-month. Get more time frame in here. Check this out. Look how we kind of chopped along. And then we shoot up kind of exponentially here. Yet again. Now this kind of scares me a little bit. I don't know about you. Kind of chopped along, and then epic run higher. Now, maybe it's as high, maybe it's not as high. But what happens if we did maybe an 80% correction from here? Dun, dun, dun. I'll tie this all together as we go along. But look at this. If we were to take an 80% pullback, 1200. Eesh, that's a pretty major wild correction here. That is potentially in the cards. And this might not be just a 2025 prediction. Now, here's the prediction though that goes with this. I think we go below 4,000 on S&P 500 before we go above 7,000. Lots of banks coming into 2024 all predicted we were going lower on the S&P. We ended up higher at 5,800 basically at the end of the year. This year, they're all predicting we're going higher, much higher, many of them, all the major trading banks. And my prediction is we're going below 4,000 down here, below 4,000, all the way down right in here before we go above 7,000, which is just right up off the top of the chart. Whew, that's a big correction. And we'll probably kick that off sometime this year. Probably kick off that path. Now this path may last longer than just a year. This could last a decade even. So this is my first big bold prediction right there for S&P 500. Below 4,000 before we go above 7,000. 7,000 just hanging out right up here. All right. Now, next up, I kind of went through several things. Gold, we can go hit gold. So let's touch on gold. I like to look at the gold futures. That's just my kind of home right there. I watch these pretty much every day. I watch 5 charts every day. I watch ES, NQ, Russell, which is RTY. I watch gold and I watch oil. Those are the 5 charts I watch every day, all day long, and they're all futures charts. Now, gold is kind of interesting here in what it's done, especially compared to silver. So we'll talk about both of those. I'll throw in silver as a bonus. So gold went through a multi-year pullback right here, and then we've shot up right here, just short of this 272. Now, the more we consolidate right here, the more this sets up that we're likely going to get another pop right up in this area. And you can't hardly see the price right there, but it's roughly 3,000. I think we're likely to see 3,000 sometime this year, maybe later in the year, but likely to see 3,000 in gold right up there. That's my big prediction. Now, silver right here probably has an outsized opportunity to outperform. Why? Because when we zoom out and look at the silver chart, we topped right up here and we pulled back. And gold, I kind of already showed you without going back. But when we run the same kind of Fibonacci analysis from this high down to this epic low right there, we're not anywhere near those extensions like we are already on gold. We're sitting right at this breakout level. This is a breakout, a 618, we bounced off of it, bounced off of it, bounced off of it, pulled back, came up again, little trouble, and now we're finally kind of establishing a back test from above. Once this takes hold, this one on silver, probably going to go rocketing up to at least 60. I think we can get to 60 this year. We'll probably end up going even higher, possibly 70 or even 120, but those might last out in the next year, the year after, 26, 27, possibly even 28. So if you're going to try to play this, I'll play it in shares, maybe with SLV or some physical, or go as far out in options as you possibly can, 27, if those are available. In whatever instrument you want to play, whichever way you like to play silver. You can play silver on futures or you can play silver in SLV. Kind of the same. SLV has a little bit lower targets dollar-wise because it tends to lag the spot market price on futures here, but it's kind of what I'm thinking right there. So silver may have the outsized opportunity to outperform. Now, Bitcoin. Let's go talk about Bitcoin really quickly. And what do I expect to happen in Bitcoin this year? Let's just go to the all-time history right here. This is TradingView. So we've got this interesting pattern that happens every 4 years on Bitcoin. If you've never seen this before, well, we tend to get a big run, then we do a ginormous pullback. Right here, this high, this low, right like that. And that was about a 90% pullback. Off of that pullback, we did just my simple Fibonacci analysis like I do on gold. We got another big run higher, continued up right there, and we topped out. Got to the 272. That was back starting in 2012 and kind of culminating 2013, 14. Then we got another large pullback. All right, 272. That's an interesting Remember, we went through the 1618 and got up to 272. This one, we pulled back again. Nice big fat pullback. Everybody just knew that Bitcoin was going to go back to zero. 80% pullback again. Crazy big, nasty pullback. I have it right there from 2014 back down into 2015 lows. Then we came into the halving event in 2016. We went on another epic rally higher, hit that 1618 and that 272 once again. Right there. Boom. That was 2 times in a row we did that. Same kind of pullback, same kind of expansion. Interesting. Now we come forward again. We did another big epic pullback from 2016 down into 2018 lows. Right there, another 80% pullback. And then we went on a run again. This was right on the back of COVID right here. It kind of had COVID dip in there, and we popped and stalled out. This time we kind of did a double top situation. And if you run the Fibonacci analysis from this high down to this low, we double topped at that 1618. We came up shy. We didn't get the extension that second time. We didn't get that blow off top extension up to that 272. It was interesting. 178,000. That number is interesting too. Then we did another big nasty pullback that many of us probably remember because it's relatively recent that we topped out here in 2021 and we bottomed out here late 2022 in Bitcoin, another almost 80% pullback. That's the same, pretty similar anyway. And so we go from that high down to this low, and now we come up and look where we are. We're at the 1272, just kind of hanging right around 98,000. And here's the big bold prediction is I expect us to hit at least this 1618 level right here, which just happens to be right in the vicinity of that prior 1272 that we missed, or the 272 that we missed from the last cycle, right around that $170,000 price. So 172 is really the expectation I have for where Bitcoin tops out. It could get a little spicy, go up to 178. Maybe, just maybe, we resume and go to the 272 again. That would be 456. But let's be a little more conservative than that. That could be where we go, but I think we're going to stop at 172. Probably exhaust it right in that neighborhood. And that will probably happen this year. Now, here's the scary thing. If we do this before the inauguration, if we get some crazy move higher in the next 2 weeks, we pop up like that, stop right there, that's probably the end of the rally in Bitcoin for this whole 4-year cycle. And we're going to go down 80% correction. It's going to suck. It's going to suck pretty hard. Probably won't bottom out until sometime late 26. Maybe big pullback correction, something like this. Maybe back down in this neighborhood, somewhere around 84% pullback, so 30, 40,000, somewhere down in there. Yeah, that'd be rough, right? Be real rough after watching it go all the way up to 170, come all the way back down. So that's what I think is going to happen right there. Something like that and like that. And this will be bumps and humps along the way out into 2026. We'll bottom and then we'll start this whole thing again, whole another cycle. So that's Bitcoin for you in a nutshell. Now, if we do that before the inauguration, watch out. If we take it and we kind of correct back down a little bit, we have support in the immediate term right here in this vicinity, this yellow line, right around 80,000. So we've got that kind of support right in there. In the near term, if we just correct into the inauguration, then we'll probably make that big epic run. And it could take us out to October. If we do this first, the rest of the run could take us out to October. If we just pop now, get all the way up to like 150, 170,000, it's probably game over. And crypto summer is done. All right, that's kind of the big bold prediction on Bitcoin. For as far as Doge goes, now this is hand in hand with the inauguration coming up on January 20th. Right here, Doge, that's the Department of Government Efficiency. Old Elon and Vivek are gonna cut government spending. Now, the last several years, the last 4 years, the only real reason we haven't been in a recession is due to crazy growth in government spending. That's the only thing keeping GDP growing at all. What happens when we cut out government spending? They've They've been pretty adamant that they're going to cut 25+% of government spending. If we cut 25% of government spending, well, I think that's going to have some detrimental effects on all of assets going higher. The market's been pretty much like a crack addict, heroin addict on this government spending. And if we take away the government spending, well, I have a feeling, a very strong feeling, that we're going to plummet into the abyss. Now, that brings me into the next one, interest rates. If you've seen this, if you haven't, this is Delta Golf Sierra 2, 2-year constant maturity rate. And along with this, I've added the Fed funds rate as a comparison chart, and that's in orange. The DGS2, 2-year constant maturity rate, is in blue right here. Now we zoom out a little bit and go back as far as I've been professionally trading. You might remember this right here. The DGS2 rallied higher, and then the orange, the Fed funds rate, caught up to it and crossed over it. And when those two cross, create a problem right here. You may know what problem that was. .com bust. All right, that lasted a while. We had lots of QE. We went down to the beginning of zero interest rate policy. A few of us got lucky and bought houses in 2003. And then we went into another period of expansion of interest rates. The blue rate, the market rate, the DGS2, the 2-year constant maturity rate, ran higher. The Fed chased it higher. The Fed got above DGS2 and held steady for a while it started pulling back. And then it started pulling back hard, and the Fed chased it back down into another problem. That problem being the housing crisis or the great financial crisis, however you want to look at it, in 2008. Right there. Then we started the long period of zero interest rate policy that many of us have not known anything other than that in our business lives, zero interest rate policy. But then something kind of started kicking off here late 2016, and interest rates started creeping higher. And then we had a freak out kind of situation when the Fed caught up to and crossed the DGS2 right there. This happened in mid 2019, and things got a little weird in the stock market. I knew something was brewing. I kind of was prepared. All right. And guess what this culminated in? The COVID flash crash as we went back to zero interest rate policy, back to the bottom. Funny enough. Now we started climbing rates again. And this time we're doing it the fastest rate we've ever done it in the history of raising rates. The market rate took off like a rocket, and the Fed was chasing it up higher, 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 but we crossed. We crossed right in here. I've got lots of stuff drawn on here because I've kept this drawn on the chart for a while. Let's just zoom it up and talk about it, though, in a more reasonable time frame. So the Fed kept raising rates, even though the market rate kind of started drifting down lower. Now, a funny thing happened here just recently is that the 2-year rate actually popped up briefly above the new target rate, the middle of the new target rate. After the Fed funds rate was cut a couple weeks ago, this actually briefly spiked up right above that rate. Now, just recently, last week, it dropped back down. But if this rate starts taking off, breaks out above the downtrend of highs right here, the Fed is going to be forced to raise rates. And I think this is going to happen in 2025. Everybody's talking about 2 more cuts. Market kind of freaked out on us all when they got kind of soft on cutting anymore. Guess what? What's it going to do if we actually start raising rates more? That sounds like back to the S&P. We might start pulling back some. And it could develop into another crisis situation since we're crossing the rates that leads to another period of zero interest rate policy, QE, sometime out here. And it could take a while for this all to resolve. Government debt going a little crazy. Inflation is probably going to go with this. We may have to chase rates higher because of inflation. So those are kind of the big, bold predictions that I brought with me today. So there you go. I go live at 9:15 every market day and kind of make epic predictions sort of like this on charts. you can come join me for absolute free right here, jeffreytrader.com/YouTube, right there. And that's really what I brought today for everybody to kind of, take action and come join me, come follow me. Just come be a subscriber on YouTube. Follow me every day. I go live. You can watch it once a week, twice a week, 5 times a week, all the times I'm live. And I have a 100 wins trade challenge going on this year. Now, I'll take some live requests as we wrap up here today. Looks like we have some Coinbase. I can pull that up and talk about it briefly. So I'll take requests until we run out of time here today. So hopefully you found some of my predictions interesting. Now, Coinbase has done my favorite pattern here. We did this, what I call a market roadmap bounce. We came up and we hit the target right there. Now we're doing another sub bounce. I kind of expect us to tag what I call the roadmap line right there. If you want the roadmap line, it's right there on my YouTube channel for free. You can go get it. Go get the code. And if you have interest in having an easy button, it's like $5 and the link's in the description of any YouTube video. So right there, probably gonna pull back and then take a rally up to about 427 is the next upside target. And I have lots of these alerts along the way because I am invested in this going higher right there. All right, let's roll back up. I saw a couple more MTH. Let me clear my drawings. MTH right here. Looks pretty bad. Let's see what we might have. Uptrend of lows. We just broke below. That's not good. No bueno. Looks like on the fib basis, we stopped at the 1618 and turned down. That's probably going to result in a bigger retrace off of that low to that high. Here's where the support zone, I would expect us to find some supports right in this neighborhood, right around that 618 retrace. Probably like that, somewhere right in there. I would expect us to retrace on down, something like that in the coming weeks and months. Right there. And then I saw XPEV, and I would not expect that to do anything except go lower at this point. Probably going to come back to the bottom. Right there. That's a big downtrend. Having a lot of trouble getting above the downtrend of highs at all. Ugh. Yeah, it's pretty gnarly. Probably going to go back down. Would be my expectation there. And let's see. I see NEM. NEM. Did a deep retrace, but got this high right there, that high, that low. We're kind of at the 618 retrace. So this could be just sitting right here in this support zone, similar to what I just drew on the other chart a minute ago. We could be looking for a big potential bounce here. Got some other stuff drawn on here, but right now, this is the operative path. Coming weeks, probably into late 2025, early 2026, we could see a move on up into this 72 area. We've got to get through the daily roadmap line resistance. That's right here in this vicinity, around 45. If we get through that, probably going to see a rally up into the 72, 73 area, maybe as high as 90, possibly 110. That could take us longer than just 2020, the rest of 2025. It could take us on out into 2026, 2027, like that. And let's see, I see RGIT or RGTI, excuse me. And quantum computing. If this is one of those quantum computing things, I would be very, very careful on. Very careful. There's not really a real application for quantum computing yet. So this is coming up into resistance, even though this pullback doesn't really mean anything. That is coming up into a potential resistance zone. This move off the low, this high, that three-wave correction, 1, 2, 3. Yeah, there's resistance right around this level right here. And I would expect it to do some sort of retrace before it made an extension if it's going higher. If it fails here, probably come right back down into this zone right there. Yeah, so that's a big risk, like 90 on the upside versus a dollar on the downside. So yeah, I don't usually trade charts like this. So just too much unpredictability. It's kind of a hype chart right there. And let's see, EQT. And my opinions are like, a-holes, everybody's got one, and mine may or may not happen. Sometimes I get lucky on these things. I say that tongue in cheek. I get lucky a lot on my predictions. This has been sideways a long time, and kind of have this upside resistance that's been cooking for a long time. Oh, this is pretty gnarly. This looks a lot like Russell and a few other charts where it's very, very difficult to predict where this might go next. I think we're probably going to see this stall out somewhere in this neighborhood and then go down again. Maybe get a lower low than this one all the way back here. It's kind of what I envision on EQT. And DJT, that's been a difficult chart to, well, I got it exactly right on the pullback. That I got exactly right. Said we were coming back to the lows. We did that. Now we spiked up and we retraced, held the roadmap line. What next? What next? So this I called right there, right? This pullback right there, called it, nailed it, got it. And then we rallied up and we're sitting on the roadmap line. So what next? What next, right? Look at that. We didn't really hit any of the fib lines on the downside, so it doesn't really set up a large, high probability upside. This move down, hit the roadmap line, signature road. I'm talking about two different patterns here. The roadmap pattern where we find support at the roadmap line, bounce, we haven't broken through the resistance. See how we actually hit right here and bounced up, hit resistance. The 618 level is resistance right here, right there. So this will continue to be resistance, and we got to break through that. Once we do, we've kind of put into play, missed my drawer tool there, put into play this 60-66 area right there. So this will be resistance, and that would be the upside right there. Well, now I know we're getting close on time. So David, if anytime you need to interrupt me, just jump in. And I see Mora right there. This one is an interesting one. I got to jump up a time frame really quickly. We have this big move, like I was talking about a minute ago on the 618 bounce. So we've done right here, found support. This puts into play this giant move right up here, but this could take longer than the current crypto pullback. So if Bitcoin runs out of juice, we get that upside 172 target. This may only make it up here, pull back before we can do this bigger move later on the next cycle. That'd be the bummer right there, but that could be crazy upside target right there. Look at that. Yeah, number. Absolutely ridiculous. Much more sane kind of target. I'll call it much more sane. Would be something like 102 right here. And these fib lines aren't nearly the right proportion when you put it on this level. So it's going to have to get above this 31 area to get that rocket ship move right up in there. All right. I think that's going to probably put the wraps on it. So thanks everybody for coming. Remember, you can go to jeffrytrader.com/YouTube. If you want to see more predictions like this, come talk with me. Just, the chat is open every day for people to talk to me. And I don't usually take requests in the morning, but I do on Tuesdays at 5 p.m. Eastern every week. All right.